Welcome back to another amazing episode of the Lobster Talks, where I interview YC founders so they can tell you their story, what they learned along the way. And today I'm very, very excited to have Roberto on the podcast. Roberto, thank you so much for being here.
No, thank you for the time and the space. I'm happy to be here and talk a little bit more about my entrepreneurial journey and hopefully share some knowledge and share some learnings and hopefully we'll make for some entertaining content here.
I am absolutely sure it will. Thank you for being here and taking the time. You're probably extremely busy because you're the CEO, one of the co-founders of Baubap, which is a very, very, very fast growing company from Y Combinator out in Mexico. And what you've accomplished in the last 3.5 years is absolutely incredible and amazing. So let's dive in. Could you introduce a little bit Baubap and introduce a little bit of yourself?
Of course. So I'm Roberto Salcedo. I'm Baubap CEO. I was a corporate banker for over 12 years at HSBC, where I was in the top 1% of credit underwriters. I guess that's where the expertise around building Baubap or behind the idea of building Baubap came from. Today, Baubap is the leading AI-based lending app for consumers in Mexico. We are servicing almost 2 million users today. We have 500,000 active customers, and we are making $109 million in revenue this year. So very excited around our progress. And basically, that's in a nutshell Baubap and a bit of myself as well.
That is incredible. I'm pretty sure so far you're by far my, highest company in terms of revenue in all of my Y Combinator investments. So I'm, of course, a very, very proud investor of Baubap, but I invested at the beginning in 2021 when you were just getting started. So when did you, I think 2021 is when I invested, but you got started maybe in 2020. How long ago, or how actually not that long ago did you start?
We started actually in 2019. Just with the idea, building the app, building the models, the underwriting process and everything we needed to start originating loans. So we started back in 2019 with disbursed our very first loans in 2019. From there, it started taking off, right? We had a couple of very interesting years in which we raised a little capital here in Mexico mostly, and we raised some debt funding as well. So by the time we got in Y Combinator, we've been at it for 2 years. We were already making good revenue. I think we were making something in the realm of $1 million in recurring revenue when we joined YC. And once we joined YC, we really have everything we needed to keep scaling this business up. We were profitable. We were doing a nice revenue amount. And then we had the support of YC and the investors just like yourself came in and took off, man.
It really, really, really did. So that's mostly what I want to talk about today. Why do you think it took off? What lessons we can learn from that, and how was it for you to live through that? So it's been less than 5 years that you started, or just 5 years exactly, and you're doing more than 100 million in revenue this year. So there's very, very, very few companies that are able to do that. Of course, you're in a business where it's actually not easy, not difficult to find customers. So if you're lending money, everybody wants to get money lended to them. What's really difficult about your business, I believe, is actually getting the money back. And that's where you really excel. And but in your own words, in your opinion, why were you able to achieve such an incredible growth so quickly?
I guess it comes to one of our strengths. I think we've been extremely capital efficient. We already raised $3 million to get us where we are.
That's crazy. It's just crazy.
I know, man. I know. We used to think of it as a disadvantage, but actually it became a strength. And the reason behind this is that we were so capital constrained at the beginning that we were not thinking about hyper growth. We were not thinking about let's lend as much money as we can or acquire as many people as we can. What we were thinking is let's just make sure our underwriting process, our underwriting models, and our technology works and delivers great results, good default rates, and let's make sure of that. And the money will come next. So we focused on that. The first couple of years in Baobab were the most demanding in terms of how much we built. We built everything we use today. And I don't know if you remember, but we didn't use any third parties whatsoever to service, underwrite, do KYC, identity check, fraud verification or fraud prevention. We built everything ourselves. So I think I think that was the secret sauce. Us being able to spend that much time only worrying about product and about the technology. And then once that was ready to scale up, getting more money into it or putting more money into it during YC or right after YC. By that moment in time, we were really ready to scale up a lending business profitably and with good default rates. And I think that was an advantage for Baobab that was very different from what I've seen from other lending startups that could not reach profitability ever, that could not get good default rates because just too much capital at their disposal. They wasted a ton of capital to get to scale, you know? So I guess that was the secret sauce about Baobab.
Wow, there's so many learnings in what you just said. I mean, it's interesting. You're thinking the fact that you didn't raise so much is actually an advantage because other startups, in your opinion, they just raise too much, and so they get wasteful. Probably they have too much money. You had to become. That's very interesting, and also something I want to underline that you said. You built everything. It's interesting. I have another fintech in my portfolio who's also growing very quickly, not as quickly as you, but also when I ask them, they say some of their secret sauce is also building everything in-house as well. So this seems to be, if you're out there, if you're building a fintech, there's a lot of people building fintechs out there. Potentially you could look at building everything yourself. If you're able to, you have the capacity, the bandwidth and the enough people to build, you could do that. And so just want to reiterate for everyone listening, you only raised a seed of 3 million. And so since then you've been just financing your own growth and you've been profitable, which is extremely exciting, which means there's no more dilution for you after the seed. But today doing 100+ million, we can easily say you're a unicorn. Like by any measure of valuation, you would be worth over $1 billion. So you're actually building a unicorn with only $3 million in fundraising. I just, it's incredible. I want to congratulate you on, I mean, you deserve all the applause on that very topic. So you become, even though you're not officially unicorn because you haven't raised at over $1 billion, but anyway, I give you the corn. I give you the horn. Sorry, I give you the unicorn status. Does this change? I mean, I'm sure you've thought about this before. You're like, okay, we do over 100 million now. Things are different. What has changed for you now that you're at 100 million? How do you think about business? How do you think about the company? Are you thinking about exits? Are you thinking, how do you think about the next 10 years?
Of course. So my role within their business has changed, especially in the last 2 years, because back at the beginning, it was a lot about building, and building alongside the engineers, and doing the product definitions and the building the models and building everything, every single component we needed to originate loans with good quality. But then once the business started growing, and especially in the past couple of years, I guess my role transformed into something very different. I don't get involved that much into every single aspect of the operation of the business. I still do product myself. I get involved in the specifics of product today. I also need to focus my time on company building, defining the culture, the way this business works or this team works, building the team. So I think my role has evolved significantly. I'm still learning how to adapt to this new phase of the business. It's not the same for us to risk $1 million than to risk $100 million, right? So there's been a lot of adjustments happening. Like I'm still learning, how to be the CEO of this business. And for this, the YC network has been extremely helpful. I've had the opportunity to talk to other founders that have similar scale to our business on even larger scale. And it's interesting because we all share similar problems. We all share similar stresses or pressures and stuff like this. So it's been also very nourishing to share my story with other founders, listen to their story and their points of view. So I have now like many mentors in order for me to grow into the role the company needs from me right now.
It's amazing. Still day one, you're still learning this new
Of
job. It's not
course.
the same job as before. How many people do you have right now in your team?
30 people.
Yeah, it's a lot of people to manage for sure, and to build a culture
A
and
lot of
everything.
a lot of people.
And so you
Yeah,
guys
that's
are based in Mexico City, right?
Mexico City, yes. Although we
Amazing.
work primarily.
Oh, so you have employees all around the world?
We have employees not around the world, but all around Latin America.
Okay, amazing. Yeah, it's easier if it's the same time zone, I guess. I
Same
wanted to
time, so yeah,
exactly. Yeah.
Go ahead.
No, sorry. I wanted to. You talked about YC and the network, and that's what many YC founders talk about. The value. And most of the people that I talk to are not, have not reached the stage that you have, because it's extremely rare to get there. Again, very impressive and congratulations. But even for them at a very early stage, the network is very powerful. But you're a LATAM founder. Obviously, you're in Mexico City, in Mexico. And so I wanted to ask you, what do you think about YC pretty much getting out of Mexico, getting out of everywhere that's not Silicon Valley? Do you think they're making a mistake? Are you sad about that? Or do you think that's fine? Because, for you, it worked out. What's your opinion on that?
I would say it's disappointing, because it sends a poor signal to everyone else in Silicon Valley. And there was a big lockdown maybe a couple of years ago, maybe 3 years ago.
Oh, yeah.
So it's not a good signal, of course. And it is disappointing to me because I think most of the investments they've done in Latin America have been successful. You could argue that if you look at the Latin portfolio in an isolated way, I'm sure it can even perform better than the US portfolio in terms of earnings of equity or value, in terms of ROI. I'm sure there are some Latin investments that have paid out significantly for YC, especially because of how the deal works. So it is kind of disappointing, but also I guess kind of expected. They changed leadership and they changed focus a little. So I still think that LATAM companies had a chance getting into YC. It's not like YC is saying like, I'm not going to do any LATAM deals. It's just that they have reduced the exposure to LATAM.
Yeah.
They need to play their own strategy, I guess. And yeah.
It's interesting. You're absolutely right. There was a huge hype with LATAM. But what's interesting is I was going to say it slowed down a little bit, but I think actually it didn't slow down that much. I think there's still a lot of LATAM hype, and for a good reason. There's a lot of very interesting companies being built there. You could argue that even if YC is not in LATAM anymore, but when they were, I think it really helped the whole ecosystem. And I agree I think it's interesting. I would love to see, no one has those numbers, but I would love to see the numbers on just the LATAM portfolio of YC could actually potentially be better than the rest. It's very, very possible. Of course, when we talk about LATAM, when we talk about everything, they've invested heavily in India at the same time as LATAM. And now, same thing, they've pulled back. And same thing as LATAM, India in itself, with or without YC, is a very interesting place. Things are moving very quickly, etc. Some topic that often comes back when we talk about those more developing economies is the exit potential. If you're a tech company in the US, you have two very good exit strategies. One, you can IPO on the stock market, New York Stock Exchange. Everybody, is interested in that. Or there's actually hundreds, if not thousands, of big companies, tech companies, who have the deep pockets to put the tens of billions, sometimes hundreds of billions on the table to just acquire it. And of course, when you're thinking of Mexico, for example, and India, those two countries, for example, which is I think the two biggest countries outside of the US for YC, obviously the stock market is much smaller and it's not really tech oriented. And also you have much less tech giants. You have some, but very, very few. And I know this in France. As you know, I'm French originally, but the biggest fintech unicorn is worth around 5 billion. So they would never exit below 8 or 10 billion. But the biggest actual bank, French bank in the stock market, I think is worth 20 billion only. So they don't have enough cash to buy that. Is this a problem? How do you think about that? You must be thinking, maybe not today, but at some point about the exit strategy. I'm sure you've thought about that, and maybe you have better answers than me because I don't have the answers for now.
I think there is a lot less potential, as you said, outside the US or the rest of the world. There's a lot less potential for M&A, definitely. And I think the main bias, it's not even to do with how much capital is available around the world to invest or acquire new businesses, but it's actually a bias on how those companies were built and how those sometimes families build their empires and build their fortunes. Because what happens in the US, which is a very, very relevant phenomenon for their economy, is that there's a huge entrepreneurial community, right? And venture capital has been backing new companies, new tech for 50 or 60 years now. The rich people now have been throughout those journeys in the US. You see Bill Gates, he didn't really needed to raise that much capital, but he did raise some money. And then you see Apple, which was venture-backed. You see Cisco, you see Sega, you see a lot of companies. And now you see the people who used to lead those companies reinvesting into the ecosystem. And since they shared that journey, that you can scale a business massively using venture capital, you can then IPO and then M&A or whatever, they know those stories. And in the rest of the world, the story is completely different. I'm talking about specifically in Mexico, where you see the people who has wealth in Mexico, it's wealth that has been built throughout generations.
And in Europe,
with very little outside capital, sometimes non-outside capital. So the wealthy people in Mexico and the people who lead large companies in Mexico, basically looking to see the same stories, and they just can simply wrap their heads around VC valuations, VC investments, So I think there's a problem there for money. However, I do think there are going to be more paths in the future, companies outside the US to IPO in interesting stock markets. Even in the US or in Europe, I think more paths are going to open within the next 5 years to find some way to start competing with the stock markets in the US and attracting new companies to IPO in UK or even France. So I think there's going to be a lot of movement, and the market is going to change within 5 to 10 years. And we will see a lot more exits in Latin America and in the rest of the world.
That's very interesting. I think I agree that the European stock markets don't compete and can compete. You seem very, very optimistic that they're going to react and do something about it. I'm very pessimistic about Europe in general. That's why I invest in the US. I don't think, maybe London will react because they're much more business prone. Maybe the Nordics, Sweden, Finland might react, and Norway. I don't think France. I mean, I don't know. I can't speak for the French, for everyone, but I don't think France is going to do anything about it. So you would potentially invest. Sorry, you would potentially, if everything else was right, IPO in Europe. You'd be interested in that.
And this is one of the reasons that I think is going to change. We have been already reached out by the London Stock Exchange.
Wow.
To see if there was interest of Baubap IPO in there, So this is the effort I'm starting to see. Like, they reached out to us. We didn't reach out to them. And they wanted to explore emerging markets. They want years. some companies will IPO in the US. So that's going to bring in a lot of cash to Latin America. And I guess the tide will be repaid. And I'm pretty sure in Europe, something's going to happen. The stock markets have become a lot less competitive in Europe than in the US, right? So they need to become a lot more active in emerging markets. Some African companies have already IPO in the London Stock Exchange. There haven't been like huge IPOs, but it's like middle market is happening. So this is why I think the strategy can swift, especially in, like you said, in stock markets like London Stock Exchange or the UK stock markets.
What's interesting as well is there are now competing stock markets that want to open in the US as well. Texas want to have their own stock market. So that could be also something for them to attract. And even in New York, there's been a lot of foreign companies. We've got some Chinese companies like Alibaba, I think Tencent as well. We've got a new bank in Brazil. So it's not exactly LATAM, but it's, same continent anyway, that has IPO and I think is doing quite well. There's Mercado Libre, who's in the US stock market. So there's some interesting thing. I take from your answer that you're not going to IPO in London, that you declined. But, how are you thinking of exits? Are you thinking after 5 years, the timing is getting closer? You can just say Joker. I don't want to talk about that topic. That's fine. But or are you thinking you want to do this for 5, 10 more years? What's your thought around that as well?
Of course, I think, and this is talking on today's data, right? On the information I have today, I think we are gonna keep working and keep building privately for the next 5 years. And then we can start thinking about exit. I'm very excited about the exit in the US or IPOing in the stock market in the US. I would do it in the UK if it made sense economically. And definitely, I actually didn't discard ourselves out. I said, let's keep the conversation going. Let's build a relationship. You get to know the business. We get to know you. And maybe in 3 years, 5 years, we can discuss seriously. So it is a possibility for me, but I don't think it's something that we will consider within the next 5 years. I think there is another growth sprint that we can do privately. And then the IPO would be a lot more significant than it could be today.
Well, that's very interesting. I mean, it makes a lot of sense. If you have patient investors, you can count me as a patient one. That's not a problem because you're self-funded. You don't need, because IPO is, of course, you offer liquidity to your investors, but it's also to raise some money. If you're self-funded, you don't need the IPO. You can stay private. You don't have any reporting headaches, nothing like that. So it does make a lot of sense. I want to sort of go back to the beginning where I was praising you for building such an amazing company. I'm very interested to follow what you're going to do in the next 5 years as well. Because if you did this in 5 years, starting from scratch, now you're not starting from scratch at all. You're going to do a lot of new things. Actually, maybe we can stop on that for a second. Can you share some of your plans for the next 5 years? What else do you want to build? Do you have a target of how big you want to get? Is it any new countries? Is it just becoming bigger than the biggest banks in Mexico? What's planned for the future?
Of course. So right now we're in the middle of a capital raise. So that's I just use this for everyone. But we're in the middle of a capital raise. So once we close this raise, we basically can move faster into first becoming the dominant player in Mexico of what we do, which is consumer lending. We are actually very close to being the absolute leader in consumer lending or in lending. So I think with this raise, we really become the dominant player in Mexico. We actually filed for a regional banking license earlier this year. So we're expecting to be licensed to take deposits before the end of next year. So we are building basically our own banking core. We will launch essentially deposits, bill payments, payment processing, eventually investments, products specifically built for our customer base. So we are very excited about that, of course. And for the international expansion, what we are thinking, and this is something that is also happening today, or it's being built today, is we are going to package our entire technology. So everything we do for KYC, onboarding, underwriting, servicing, identity check, etc. And we are going to start selling it as an AI underwriting as a service platform for brick and mortar banks, traditional lenders, fintech lenders, challenger banks, basically anywhere who is tapping or unlocking a new customer segment in Latin America first. And eventually we would love to explore the opportunity in the MENA region, even India, because those represent bigger economic opportunities for us.
Very big.
And they share similar economical challenges to Latin America. So that's how I think for the next 5 years of Baubap.
That's amazing. Well, I'm going to be very, very, very excited to see that and to follow that. Clearly, you're doing a lot of things right. I'm not sure you're a perfect human being. Nobody is perfect, but probably in terms of building a company, you're now very close. And sadly, not all entrepreneurs, have that trajectory, are able to go that far, that fast. But with your network, with all the YC founders that but I'm sure you know a lot of entrepreneurs outside of YC as well. For all the entrepreneurs who are listening to us, whatever the size, I'm guessing most people are below 100 million revenue because that's just where the majority of people fall. But what do you think Baubap does well that other startups or other companies do wrong?
I think, especially at the beginning of Baubap, frugality was a core value for us. Becoming a scrappy and try to reverse engineer everything so we could build it ourselves and become very cost efficient. I think people, especially people who raise a lot of money, become pretty relaxed on how they use that money, So they start paying a lot of for a lot of things that might not make sense to pay for. I remember back when we started, the advice we got from investors, even other entrepreneurs, you should not be building everything yourself. You should lease everything you can and only build whatever is core to your problems, right? I guess I didn't took that advice, at face value, because to me it's like, yeah, but it doesn't make economic sense. If I can build this instead of paying $1 for this, I can build it in 3 months, and then 5 cents for that, or the cost of that will be that 5 cents. I mean, the ROE on that investment is like huge. Like, why wouldn't I build it myself, right? Yeah. And I guess that was counterintuitive to the advice we got. And I think that's what we did well at the beginning. And that's how I think this has become powerful. Our technology has become powerful. And now we can even consider or think about selling it or reselling it to people who don't want to build their own stuff.
Yeah, that's very, very interesting and smart. I love that. I want to talk a little bit about underwriting. As I've mentioned at the beginning of the episode, I think, having the money go out, lending the money to people is pretty easy. A lot of people want to get money from you, but actually getting the money back is the hardest part. And I believe you're one of the best in this category, especially in countries with less developed economies like Mexico. It's probably even harder to get the money back, I guess, than Europe or US. Probably. I mean, that's what the numbers show anyway. But you've been self-funded and growing so quickly just because you're very, very good at recouping the money or underwriting correctly your loans.
Correct.
So that's pretty interesting and unique. Could you, could you talk about that? You of course you're not going to share all the secrets, but just, explain a little bit how is it possible that you really are the best at that?
Of course, I guess again it has to do being able to spend a lot of time deciding the way we were gonna make the credit decisions, and taking advantage of every single technology we had available. We were very early on AI, so we started using LLMs way before ChatGPT came to scene. We started working on BERT. I don't know if you remember BERT, which was Google LLM, an open source LLM. Then we also, that this was back in 2010 when we started. So by the time ChatGPT came up, we've been already building on LLMs, foundational models, predictive models for the better part of 2 years or 2.5 years. So I guess that was extremely advantageous to us. Once the technology started improving and new models and new computing capacity started to increase, we were already doing something related. So we were early adopters of everything that was available to us. So now we use Llama for our fraud case, for our identity check in a very interesting way. We use a ton of models, predictive models, foundational models. We use other language models to label data. We basically were able to audit everything we do for underwriting. That the stack now makes decisions in seconds, and it's pretty precise on the loans that get approved. So the pretty nice prediction, a pretty nice predictability of that this component. So I think that's been the case. That we spent a lot of time at the beginning. We were early adopters of new technologies, and by the time the AI wave started happening, we were already there. We had built stuff around the AI. So yeah, the technology just became better.
That's awesome. It's good. I wanted to talk to you about AI because I heard you somewhere mention, or maybe I read online, that you were using, AI before it was a thing. You were using LLMs in 2019, where very, very, very few people were using it. So you were at least 3 years before everyone on AI, when everyone else was doing crypto, I guess, you're doing AI. So I wanted to ask you the question, 3 years before everybody, you did AI. Today, what are you doing that most people are only going to find out about in 3 to 5 years?
I guess the first that has become actually our competitive advantage is that we build this gigantic data set now. So we've given out 8 million notes to date. We have lent out $600 million. So
Wow.
that's validation for this technology, right? And that's right now what makes us at the very cutting edge of things. Because most of the technology, of course, is open source, but the data and the way we process that data is actually what gives us an edge there. So right now, like I said, we are dealing with huge amounts of data. We only use alternative data to underwrite and make credit decisions. We extract all device data from our user's phone. So, for example, SMS, calendar, email, geolocation, the detail for print on the device and the phone, among other stuff. Then we pre-process that data for some models. So the predictive models actually receive processed data. We did a lot of feature engineering at the beginning of Baubap, and we validated those insights to understand why this feature was made a difference in terms of payment behavior. So we spent a lot of time building those features. And then by the time we could start using LLMs, we basically use them to process raw data. So for example, the Llama case I was talking about, for that one, we isolate all raw text data. So all email content, all SMS history, and all of the information provided by the user during the request process. And we feed these raw text data into the trained Llama model, and the model instantly delivers a fraud score for us. So with that technique alone, we've been able to keep identity theft fraud to below 0.01% of total loan origination in the past year. So that's one of the most interesting techniques we use now.
Well, that's crazy. I mean, what you're saying is very, very cool. You used AI before everyone, so you had one of the best underwriting technology at the time, which allowed you to loan efficiently and to recoup the money correctly. That's how you got started before everyone else was doing AI. Now everyone has AI. Everyone can, use ChatGPT or Llama, but now you built your moat because you were very early And so now your moat is all of your data, your 8 million loans, you have all of the data of who's repaid, who hasn't. And you can train your own open source models on those data points, which means you're gonna remain the best at underwriting, and so now you're sort of unbeatable. That's it. You've created the moat. No one can, maybe not no one, but it's going to be very difficult for anyone to catch up because you have all that data, all that head start. That's that's extremely interesting in two parts. First, AI before everyone. Now everybody has AI, but and we know about that. The AI is only as powerful as the training data. You have all the training data, so that's very, very cool. All right, we're nearing the end of our time together. I want to thank you again for the time you're giving me here. Before we wrap up, a few end of episode type of things, questions. First of all, do you have a book recommendation? Something that's really, I don't know if you have time to read with how busy you are, but if you do, something that has impacted you in terms of business that really helped your growth, help Baubap.
I do read that. I enjoy reading, and I have to enjoy reading business books more, of course.
That's great. Yeah. But it could be a non-business book. It could be a non-business recommendation if you want. That's fine. Yeah.
But I've read a lot of business books as well. And I think I have a nice stack of relevant books that have impacted the way I think about the business. So one of them is very close to my heart because I don't know if you know this, but I worked at a Michelin star restaurant in London,
really,
like 17 years ago. So I love cooking. I love cooking, and I loved that job because it was so exhausting and so demanding of absolute focus. And I actually use parallels for that job, which what I do right now. So this book had an impact on the way I think about business, and it's called Setting Up the Table by Daniel Mayer, the founder of a lot of restaurants.
Yeah.
Restaurants, but Stage Shack, and a lot of fine dining restaurants. So I love that book. It's entertaining. It's an entertaining book. It's a business book for sure. But, a lot of lessons learned from that book and connected to my own experience having worked at a restaurant, And I guess I always need to recommend something out of Latin. And my favorite book of all time, the only book I've read more than 3 times just for the pleasure of it, is 100 Years of Solitude from Gabriel Garcia Marquez, the Colombian Nobel Prize, right? That's my favorite book. And again, it really connects. And throughout my life, I read it 3 times. And I've read it when I was a teenager, and it had a message for me back then. Then I reread it when I was, like 35 years old. And then I recently reread it once I became an entrepreneur. And, I connected a lot of stuff around entrepreneurship with the book, with the story in the book. So I would also recommend reading that because it's about founding a small town in the middle of nowhere in Colombia. And the family that founded the town, shared a lot of traits with entrepreneurs, of course. And then the story is extremely entertaining, and it is a masterpiece. It is extremely well written. So those two would be my top recommendations today.
That's amazing. I mean, thank you so much. And I will put them on my list. Setting the Table, I heard about it before. So now it's my second time hearing, so I absolutely have to read it now. But the second one it's very interesting how books that are, I love books like that can connect with you on so many levels. You could read them your entire life. That's fascinating. Okay. Awesome. Thank you for that. I will let you know when I read them. I will send you a message and let you know what I think. Where can people find you if they want to, stay up to date with what's going on with Baubap? What's the best place to follow you on social media or just be in touch with you?
Oh, I'm terrible on social media, man. I tried to do it this year. I tried to do LinkedIn a little better, but there's just so much stuff to do. I really admire the entrepreneurs that spend time building their social media presence because it never seemed like a priority to me. But people can reach me through LinkedIn. Just look me up at Roberto Salcedo, Baubap, and you will find me. So we can connect on LinkedIn, of course.
All right. That's perfect. Well, Thank you so much again for being so generous with your time and sharing your story. It is fascinating. Again, huge congratulations to you, and very, very excited to follow what's coming in the next 5 years.
Thank you so much, Gabriel, and very much excited to listening to the podcast and see what the end product of our conversation was.
Awesome. Great. And to anyone who's still listening to us at this point, thank you for staying until the end. Don't forget to rate the podcast on your favorite app and to subscribe to get notified of the next episode coming your way. Thank you and see you soon.